Hi there, welcome to Kneppy Invest and welcome to Election Day, USA Election Day 2024. It is Wednesday, November 6th, and there's about 10 minutes left of trading, 15 minutes left of trading today. Overall, a pretty good day on the markets, which is expected because we had a fairly good lead in from Wall Street. I think NASDAQ was up about 1.5% or something like that. I could be a little bit wrong. 1.3%, Dow Jones up 1.02%. Now, I haven't really been following what's happening with the election in the United States. I think we first started to get the numbers about 10 a.m., 11 a.m. local time. And just before I started recording this video, first thing I did is have a look at Bitcoin because I knew Bitcoin would tell me who was going to win. If I saw Bitcoin down a fair bit, Kamala Harris was going to win. If I see a Bitcoin up a fair bit, that was indications leading to maybe not the fact, leading to the probability that Trump was going to be re-elected, which is weird to say because he's been in office for 4 years. And Bitcoin currently is up 7.4%, Ethereum up 7%. Now, Bitcoin is a little bit more, maybe not a little bit, he's way more pro-crypto than the opposition. So I think this is pointing towards a Trump victory, not an absolute certainty. I'd say maybe a 90% chance that Trump will get back into office. Now, am I disappointed or related with that? Neither. I don't really care. Just like Australian election, whoever gets back into, maybe I was going to say back in power, whoever gets into power in the next election, I don't care. My life won't change. And that's the reason I am or have been utterly disappointed with politicians over the past 30 years because it seems like they don't really care about making significant change. All they care about is getting re-elected or getting their party re-elected. That's all they care about, which means they're focused on the short term. They're focused on giving sugar hits to the general population, and they don't really care about the long-term future of the country. They don't care about the long-term or the future generations. And I really want a politician who is trying to lead or has a vision to lead the country forward over the next 20, 30 years, to make this country better for future generations. And I don't think we have any politician who is like that. So in a way, I've been utterly disappointed with every single politician that has been in power over the last 20, even 30 plus years. Anyway, rant over. So for those who love Trump, you're probably going to have a good night or good next few days because Bitcoin is on a bit of a tear. Now, if you see Bitcoin starting to drop a lot, it's heading the other direction. Anyway, and the other good thing is Bitcoin's broken out. Yeah, Bitcoin's broken out. Actually, I should say it's potentially breaking out. I probably need a little bit more confirmation before I will call a breakout for Bitcoin. And it's probably also true for Ethereum. Yeah, Ethereum is completely different. Bitcoin's breaking out, Ethereum's just consolidating, going sideways. Okay, so what's happening on the local market? We already know that's a pretty good day. So what I'm going to do is go through the best and worst performing sectors, indices, and also companies, and then we'll go through the top 5 stocks of the day. I have about 7 candidates. Not sure which 5 companies I will choose, but I'll decide that when I have a look at the best and worst performing companies in a second. I won't have a look at trading economics or capital brief. I'm going to keep this video a little bit shorter. Maybe not shorter, but I want to do some other stuff as well. I also had a good little live wire, I think it's live wire, who loves Australian banks. And in this particular article on their website, they actually compared the valuation of the Australian banks to the rest of the developed market. And you will see how overvalued Australian banks are, particularly CBA. It's actually quite stunning. So unless I forget, I'll show you that particular interesting article during the rest or somewhere in this particular video. Okay, so let's get to the ASX today. And pretty good day. No complaints from me. Everything's up, but this is not a surprise because, again, pretty good lead-in from Wall Street overnight. Tech has just gone higher through the day. I wonder if that's also pointing towards a Trump victory. I would say he's more favorable towards tech, I would assume. I could be a little bit wrong there. Anyway, let's have a look at the best and worst performing sectors. Pretty good day for IT, financials, discretionary, industrials, telecommunications, even staples and healthcare, but a pretty bad day for energy. Real estate down a little bit. I wonder if that's because of Goodman Group. They had the AGM today, and Goodman Group is by far the biggest company in real estate, so might check that out in a second. And energy down a fair bit. I would assume that's oil. We also have uranium and coal, but I'm assuming that's oil. In fact, we can actually confirm that. Let's open up energy and we'll have a look at the energy companies or companies within the energy sector by market cap. And let's have a look. Woodside, Santos, Viva Energy, Beach Energy, all down. So they're all oil-related companies. However, Yancoal, Whitehaven, New Hope, all up. They're coal. Even Paladin and Boss Energy are up. So a good day for uranium companies, good day for coal, but bad day for oil. So that probably means oil has had a weak day or weak 24 hours. Other than that, pretty good day among most of the other sectors. Materials down a little bit. I'm assuming maybe that's gold. Maybe that's also iron ore. Let's have a look at the ASX 20, up 0.65%. I'm going to say 16 companies up, 4 down. If I get this right, no, 15 up, 5 down. Oh, very close. So which 5 companies are down in the ASX 20? We have Woodside, which is not a shock. Fortescue, BHP, Rio Tinto, pointing towards weaker iron ore. And then Goodman Group, down slightly. And the best performing company in the ASX 20, we have QBE Insurance. So have Macquarie Group, REA Group, Brambles, NAB, Wesfarmers, WiseTech, and CBA, all up by over 1%. Also, Westpac is up over 1%. And because a lot of the financials of the banks are up, let's have a look at this Livewire article, not the whole article, but this nice little graph, which is sourced from Bloomberg as at 15th of October 2024, looking at the banks around the world, the developed world, including Australia, just comparing their price to book and the forward P ratio. And so any company that is at the right-hand side, top right, they are more overvalued than those companies at the bottom left. And just by looking at the forward PE ratio, all the Australian banks are overvalued, but CBA takes the cake. The highest value, no, what's the way to say it? I won't say the most overvalued company, but it is based off PE and based off price to book, the most, what's the word to put it? Let's see what they say in here. Extremely stretched on every possible measure. One of the most expensive banks in the world. Yes, that's what I'm going to use. So CBA is not one of the most expensive banks in the world. It is the most expensive bank in the world. So the only reason, in my opinion, to buy CBA is if profits significantly grow over the next 5 years, and I just can't see that. And just behind CBA, we have Macquarie Group. Okay, I think Macquarie Group is a little bit different. It's more of an investment banker, but it has different divisions, that sort of thing. But then we also have NAB, Westpac, ANZ, which is a little bit cheaper than the other banks. In fact, based off forward PE, it's actually cheaper than Bendigo and Bank of Queensland. But if you combine price to book and forward PE ratio, looks like Bendigo Bank is the cheapest of the Australian banks. And it's also in the realm of the rest of developed market banks. It's sort of a price you would expect to pay. But CBA is in its own stratosphere, its own postcode when it comes to valuation of the banks. I just don't understand why people would be buying CBA right now. Look at its forward PE ratio. It's higher than Alphabet, which is ridiculous. Even the price to book, I have a feeling price to book is above 3. I'm pretty sure it's above 3. It hasn't pulled back that much, CBA. Anyway, so interesting graph, just comparing the valuations of the Australian banks to the rest of the developed markets. And by far, Australian banks are the most expensive in the world, by far. Okay, what was I talking about? Banks. Okay, that's right, talking about the ASX 20. Now let's have a look at the best and worst performing companies on the ASX today. We'll start with the top gainers. A company called Cardiax is up 30% on fairly low turnover. I'm just going to quickly see if this company has released anything today. Now, I have been away from the computer a little bit today, but I did have a look at a lot of the announcements that were released after about 10 a.m. And there was a couple of interesting announcements in here, and I have included those companies in the top 5 stocks today. So I'm really happy I did check the announcements after 10 a.m. Anyway, I didn't check this one. Cardiax time is now 3:04 p.m. local time, which means when they're closing auction. And here no announcements. from CardiX. I'm just going to have a look at the chart. Is there a lot of excitement in this company right now? CDX. Does the chart look good? Chart does look good, doesn't it? Look at that chart. So something has happened with CardiX to get the market excited. Look at the volume too, nice increase in volume over the past month, and share price has increased from 6 cents to 12 cents. So the share price of this company has doubled within the past month. So good times for CardiX shareholders. Other than that, Nanoview. I'm pretty sure I missed a Nanoview. Let's have a look at Nanoview, NVU. I'm pretty sure they did release something today. Share price up 27%. Yes, Nanoview to commence next phase benchmarking for EMS standard of care. Doesn't sound that exciting. And you can see why I completely skipped at that particular announcement. But the market has liked it. Let's have a look at the chart for Nanoview. Does this look pretty good as well? Oh, it's all over the place. It's all over the place. I'm not that interested. Karma Co International did release something, and now the share price is above 1 cent. That is exciting. So what did this company release? It was sort of a trading update. In a way, yeah. Sales surpassed 10 million annualized revenue in October. Doesn't sound like, does it? They sell carver, that sort of thing. In fact, they want to become the world's biggest carver supplier or something like that. They did mention something along those terms. Oh, they want to become, their mission is to be the most dominant carver company in the world. And they now have sales, annual sales over 10 million. Revenue run rate over 10 million. I suppose that means they're moving in the right direction. But let's have a look at the chart for Karma Co. I'm pretty sure this company used to be called Fiji Carver, and then they changed the name. And I'm not that interested in this company right now. This chart is, it's just where the share price is. It's mostly been below 1 cent. On occasion, it just gets above 1 cent. And that is one of my rules. Do not buy companies whose share price is below 1 cent. And that has been true for Kamako most of the time over the past year and a half. Anything else interesting here? Avanti, I'll just say that's a bit of noise. I could be wrong. And that's it by percentage change, although BrainChip has gone on a bit of a tear today. I'm just going to make sure they did not release anything today. I don't think they did. BrainChip, nope, nothing. Now let's have a look at the best performing companies by market cap. Zip's had a good day. Neuren Pharmaceuticals has a good day. And I have included that company in my top 5 stocks of the day. So I'm a little bit biased because I'm a shareholder. And funny enough, out of the first 4 companies, I own every single one. I'm trading Zip, trading Temple & Webster, and trading Superloop, and I hold Neuren Pharmaceuticals for the long term. So I'm not disappointed by this list of companies. I used to trade Vista Group, then I sold out. Anything else here I own? It's so exciting. Echo IQ was mentioned in a podcast this morning, but that was released about 3 weeks ago, so I'm a little bit behind in that podcast. And really nothing else here. Okay, yeah, there's crypto ETF up 12.6%, and small cap ETF up by 5.44%. Okay, let's have a look at the top losers today. I want to see if there's going to be one company in my top 5 stocks. I'm going to say there's a company called Freedom Care Group, might be the top loser. There it is, Freedom Care Group, down 43%. That is in my top 5 stocks of the day. They released an announcement after 10 a.m., so I'll talk about that company in a second. I did not actually look at that announcement all that closely. Quickstep, nothing. I'm pretty sure Unico Silver did a capital raising or something. What's happening here? What's this? USL. Proposed, here we go. Yep, capital raising. I don't usually talk about capital raisings unless, actually that's a lie. I do talk about capital raisings on occasion. Now let's have a look by market cap. Any surprises here? Domain Holdings, they did have their AGM today. Okay, I did not know that Domain Group's share price has decreased a lot. I would probably guess that they had a negative outlook or something, or sort of a trading update that was negative. Other than that, Pantoro, Chalice Mining, Both gold companies down a fair bit, and that's probably because of gold. A few other gold companies here. And BetMaker's down, maybe because Melbourne Cup is now over. So all these companies, betting companies whose share price had gone a bit of a run, maybe they're pulling back because no one's betting anymore. I have no idea. Anyway, let's get to the top 5 stocks today. And I might make a change because of Domain. So we could actually, I have a list or group of a list of 8 companies here who could make it into my top 5 stocks of the day. Now, the very fact that Freedom Care was down 40% needs to be there. I also want to talk about Neuren Pharmaceuticals. Domain Group was down 7% on the AGM, so I'll talk about that company. Another company called Cooper Energy did release an announcement today. Just want to see what the share price has done. Cooper Energy, share price up 6%. They released an announcement that I do like. So that's 4 companies. So the next company is between Spectre, SP3, Goodman Group, Magellan Financial, and Core Lithium. I am going to choose Magellan Financial, and I'm going to put that as number 5. At number 4, we'll have a look at Domain, and number 3 we'll put in Cooper. Number 2, FCG, and I'm being a little bit biased. I'm putting Neuren Pharmaceuticals at number 1. Okay, so top 5 stocks on the fly there. So that's a little bit of a different list or group of companies that I originally chose. That's all because I saw some interesting announcements that have been released since I started recording this video. So let's start off with Magellan Financial. Now, this company releases a funds under management every month, and they did it today. Funds under management, October 2024. Now, I'm interested in this company because the share price or the chart looks sort of interesting. And I thought, if in their funds under management, we're starting to see inflows, I could get excited. So I was actually quite keen to see how their flows are going. And unfortunately, Magellan experienced net outflows of 0.3 billion, which included net retail outflows of 0.2 and net institutional outflows of 0.1. So that's a little bit of a disappointment. I thought if they could get some inflows, that would mean maybe the bottom has been reached and the share price could continue into a nice uptrend. Because when you have a look at the chart, it is looking promising. Maybe today has put that to an end. So this is Magellan's chart. Starting to look positive. Now I have, or am starting to use a couple of sort of researching, a couple of not really stop losses, we'll call them trailing losses. So one of them is percentage from the high. Another one is just using the 200-day moving average. Another one is ATR. And so I'm just trialing them at the moment. I actually do like, and might do a standalone video on this, because what I'm looking or seeing at this point in time, and I've been trying this for a while, I actually do like. Anyway, so I'm going to get rid of the trailing stop, the percentage change trailing stop. Anyway, so the chart for Magellan Financial Group has been looking promising. It sort of broke out about a month ago above about $10.50, went all the way to $11.50 and has pulled back significantly. And today's share price has fallen, but it's not the end of the downtrend. Now, I don't think the share price can fall much lower from here, but the very fact that there is funds outflow might be a little bit disappointing. So I think I'm less interested in Magellan Financial just now. But if they did have funds inflow, I wouldn't have been surprised to see the share price go on a bit of a tear. Anyway, so Magellan Financial Group. Chart that does look sort of interesting, but slightly negative announcement from the company. Okay, so that's Magellan Financial coming in number 5. Let's have a look at Domain. So I missed this one. So this is sort of a usurper into the top 5 stocks of the day. Share price down 5.6%. And they had the AGM. I did not have a look at this. Did not have a look at this AGM. So I am going into this particular announcement absolutely blind. In fact, I'm going to have a look at Capital Brief just to see if there's any mention. There we go. Trump takes commanding lead, yep. Ramsay Healthcare, Citi cuts price target. Austal shares climb on financial year earnings guidance. Bell Potter upgrade, completely missed that one. And here we go. Domain chair Nick Falloon bats away CEO recruitment questions at AGM. Domain shares tumble after early gains as Citi sees potential downgrades. Okay, so it looks like maybe the share price had risen initially. So Domain shares reversed early gains. So this was sort of after this announcement that was released. So Citi analysis noted that Domain's digital growth of 9% in the first half missed Citi's forecast of 15% due to weaker than expected residential yield growth and a year-on-year revenue decline in its Domain insights. Given the weaker quarter, the analysis said they see potential for first half downgrades, though full-year forecast will depend on further detail on the outlook, and then something about Nick Falloon bats away CEO recruitment. So this is probably just based off maybe Citi analysis being a little less or a little bit more bearish about Domain. So let's have a look at the chart for Domain. And I'm not even having, oh, that's Fortescue, DMG. And I'm not even, what is it? DHG, sorry, DHG. And I'm not even having a look at this presentation. So here you go, here's the trading update. Trading update, trading in financial year 25, a solid depth revenue growth of 15% year on year, digital revenue up 9%, total revenue up 8%. Financial year 25 cost and EBITDA margin guidance is maintained. So it doesn't sound that negative. And that's maybe why the share price initially rose, because it doesn't sound negative. But then some analysis had a closer look and then a little bit more bearish because of that closer look. So that's the only way I can justify why the share price might have dropped a fair bit, down 6%. And yes, in fact, if you have a look at the 5-minute chart, yes, share price actually initially did rise. And you might be able to see that on the 1-minute chart. Opened higher, and within that first minute of trading, it actually dropped. So this was on open. Share price opened at $3.08 and has fallen almost 10% since then. Actually, that's wrong. 10% would be $1.78. No, $2.78, and it's $2.86. At its low, it almost dropped 10% from the high, not from yesterday's close, from the high. Let's have a look at the daily chart. Is there any reason to be excited about Domain? And the answer to that is no. Share price in a downtrend. And it continues in a downtrend. There are suggestions made the share price is starting to go sideways, but you could only suggest that at this point in time. It's not really confirmed. So no interest. I have no interest in Domain. I don't think it's a high-quality company, and the chart looks negative. Coming in number 3, we have Cooper Energy. They did release an announcement with my favorite word. Favorite words. Guidance increase. Now, this is in relation to production, so it's not revenue, profit, that sort of thing. But I love any sort of announcement that has the words guidance increase, which means there is a high likelihood the share price will rise. Now, Cooper Energy up 6.1%. I did not have a close look at this. In fact, I did not have a look at it at all. All I care about was the title. So they're pleased to increase its financial year 25 production guidance to 65 to 72 TJE, terajoules per day. I'm completely guessing, okay? TGE, this is gas. So I'm pretty sure that's joules. I could be completely wrong. TGE, gas. Acronym. Well, there you go. Acronym gas. It's not really an acronym, is it? It's a, I'm going to put joules. Joule. Okay, we'll just assume it's joules. Anyway, I could be, if you know, just leave in the comment section of this particular video. I try to learn at least one thing a day, and I was thinking maybe I could learn something today. Anyway, so that's a nice little increase from the previous guidance. This increase, I like when they do an explanation why it has increased. So this increase is primarily driven by improved performance at the Orbost gas processing plant relative to the assumptions used in the setting guidance at the time of the financial year 24 full-year results. Now, and together with point forward scenario analysis. Now, maybe they were quite conservative when they released their guidance for this financial year. And I love management teams who do that, who are conservative and they're able to lift their guidance through the year. Because there's a lot of things that can go wrong. And it's really hard to give guidance. So the way I would do it, if I was a CEO or something like that, trying to give guidance, I would be as conservative as possible. I would say all these things can go wrong. And if least half of these things go wrong, this is going to be our guidance, maybe even worse than that. So be a little bit conservative. That means during the rest of the year, if you raise guidance, the market will love you. Shareholders will love you because the share price will go on a nice little tear. But then you might get the reputation of being quite conservative when you do any sort of outlook or guidance. And eventually, and eventually the market will say, well, you're being too conservative, so the share price won't react as much if you do upgrade. So anyway, so a nice announcement from Cooper Energy. So let's have a look at the chart. Is this a reason to be excited about this company? A company I don't think I've ever had a look at. And interesting enough, the share price has fallen from 23 cents not that long ago to 17 cents. Share price was in a pretty big downtrend from 2022 into 2023. You could have bought shares not that long ago at 9 cents. Well, 1 year ago at 9 cents. So share price has risen a fair bit. I think this run up in share price started 2024 was a little bit too rapid. So we really need to see a little bit of pullback, or at least the share price goes sideways. But unfortunately, the action today is not really a breakout because the share price has moved into a short-term but down trend. And the whole reason I do or go through this process is I'm looking for breakouts, sort of like crypto or sort of like Bitcoin happening right now. By the way, let's have a look at Bitcoin. Ooh, it's dropping. It's only up 6.7%. There you go. Get rid of that announcement as well. Okay, so let's get to company coming in number 2, Freedom Care. Now, this company is, I think it has a market cap of like $4 million. Let's have a look. By percentage change, has a market cap of 1.77 million. I was even too high. So this is a really small company, but share price is down 43%, and they did release something, market update. So I mentioned earlier that my favorite words are upgrade or guidance upgrade. And I also love any sort of announcement that says market update. I will have a look at those announcements. So this is market update regarding NDIS notices. Now, the second bit of this particular title, so obviously this is negative. And we know it's negative because the share price has dropped a lot. Okay, so advises that its wholly owned subsidiary, Freedom Care Group, received 2 notices from the NDIS, Quality and Safeguards Commission, after close of trading yesterday. The company has engaged a litigation firm and barrister to respond to the notices. That's all I read. And I went, this is going to be negative. That's all I needed to read. So you can go through that if you really, really want to, but this company is small. I don't really care much about these sort of companies, particularly when it comes to NDIS, which is it's regulation. So any sort of changes to any sort of regulation could completely make or destroy this company. So Freedom Care Group, FCG. But the share price is down a lot, and unfortunately, if you've been a shareholder of this company, I would say you're underwater by a lot. And this chart looks ugly. A recent listing on the ASX. So it looks like they probably listed about a year ago, it looks like. And the share price has dropped and is now at an all-time low. At the height of its share price, it was above 20 cents. So share price has dropped about 70% since then. Just going to make sure it did list. All we have to do is go to the 2-year chart. Confirm it listed on the ASX in November 2023. So we're talking about 1 year ago. And I have had no reason to look further into this company since then. I did know it existed. I did know it had something to do with NDIS, and just that factor alone maybe just say, no way will I ever think about buying shares in this company. Anyway, so pretty bad day for Freedom Care Group. Now let's move on to a company coming in at number 1, Neuren Pharmaceuticals. Share price has been under pressure. Share price up 8.15%. So is this the end of the downtrend? Is sentiment now turning positive for Neuren Pharmaceuticals? So this was the interesting one. So PRV sold for 150 million, Neuren to receive 1/3, so that's 50 million US dollars. So PRV is the voucher, something voucher. Premium, no, it's a priority review voucher. Priority review voucher sold for 150 million. I did not know these are able to be traded, and they are. I actually Googled it. Priority review voucher sale. They can be traded, which absolutely makes my mind just go, how or why? So they decided, Acadia decided to sell this priority review voucher. Not sure exactly what that means. But anyway, they sold it for 150 million, and Neuren's going to receive 50 million US dollars. So rare pediatric disease priority review voucher. In fact, all I did this morning when I saw this announcement was priority review voucher, and there was a Wikipedia page. And down the bottom, secondary market. Because priority review vouchers may be sold, I was like, what? A secondary market for the vouchers has emerged and the value has increased, although the market for the vouchers is limited. Companies use the sale of PRVs to recoup expenses undertaken for drug research and development. 2015 Wall Street Journal article raises concerns about the sale of these vouchers, given that they require the FDA to shorten its decision deadline to 6 months from the standard 10 months. And they're talking about how one company sold a PRV for 67.5 million, and no one sold a PRV for 245 million. So there's a lot of money in the trading of these PRVs. So I'm not sure exactly why. That will be interesting to do a little bit more research. But the market likes it for Neuren because they get an extra $50 million. But maybe it costs the company more in the future. I don't know. So let's have a look at the chart for Neuren, because the share price and sentiment of this company has completely shifted from positive to negative over the past about 3 or 4 months. And the share price has moved into a downtrend. That's without doubt. It's in a downtrend. And even though the share price has bounced today, it hasn't changed anything. Share price is still in the downtrend. We saw the share price rally not that long ago, towards the end of September, and that rally fizzled out fairly quickly. So there's no end to the downtrend with Neuren Pharmaceuticals. Okay, so that's it for this part of the video. Let's do some of your comments. I have a fair bit of time on my hands. Let's do some of your comments. So Ben Hutchinson says, I pivoted out of CSL and into MinRes. Both quality businesses I'd like to hold, but CSL uptrend seems to have faltered and it's now below long and short-term ribbons. So I'm betting I can buy back in cheaper months. Not sure why it's downtrending, same as me. Annual results failed to impress market. Meanwhile, taking a punt, the worst is over for MinRes. On both scandals and lithium, tempered by likely further iron ore price weakness, I previously exited MinRes pre-scandal around 58, when both iron ore and lithium were falling. So was on my bucket list, buy back in list. Let's have a look at charts for both. CSL, so I own CSL for the long term, and I will trade around the edges, and the chart is uninspiring. I do think eventually the share price will break out. CSL is growing. It's still growing at a nice clip. And whenever you see these long periods where the share price does nothing, it means the company gets cheaper and cheaper and cheaper and cheaper. And then eventually the share price will move into an uptrend. And when the share price moves into an uptrend, you will see more people buy back in. It's moving into an uptrend. Now, if you look at the weekly chart, funny enough, it's still an uptrend, a long-term uptrend. In fact, it's been an uptrend. There's a short period here where it sort of moved into a short-term downtrend, but the company's been in an uptrend since 2004. Yep, and it's still an uptrend, but it's been going sideways. A nice, long consolidation period. The only problem is consolidation periods can last a long time. We're talking about 10 to 15 years. Now, if CSL goes sideways for 10 to 15 years, in 10 or 15 years, this could be really cheap compared to historical levels. So, to me, there's no trend in CSL at this point in time. This is just a long-term hold, wait for the breakout. And a lot of times what's happening now with CSL, share price gets to $310 and then people sell because that's the expectation. You sell when it gets to 310, and if the share price falls to say 250, 260, you buy back in. Now let's have a look at MinRes. This one, share price has been there's a lot of volatility here. I think that's a weekly chart. Let's go back to the daily chart. A lot of volatility here. I think you have to be brave to take a position here. Now, Ben did say he thinks the worst has been priced in. The worst is over. I think that's definitely true. The only thing that could go wrong is iron ore collapses or lithium continues to fall. Don't know how, but it could. Iron ore could fall. We just don't know. So that's the only way it could go wrong for MinRes. They do have the mining services division, but seems like mineral resources share price is dependent on lithium and iron ore. But you could see, like I had a buying price about $28 to $30. It's got very close to that, got to $30. So I am a shareholder of this company for the long term, just like CSL, and I will trade this. And so my trading position would be, just based on valuation, would be probably below $30. So it's a little bit above that, but Ben could be right. Maybe the worst is over for the company. Sensei says, talking about the Melbourne Cup, 100 to 1 won the Melbourne Cup. Yes, that's true. And weeks ago, that horse was 300 to 1. So whoever picked the right horse, good for you. With gambling, it took me a while to realize that the money you lose is the price you pay for the joy you feel the rare times you win. You put 30 bets over 3 months, 10 of them win, 20 lose, and you are excited for a minute or a few hours each win, but overall you lost a lot of money. You lost $15,000 in those 3 months, so you paid $1,500 to experience that high moment. And don't forget, the odds are against you to win. The odds are against you to win. When it comes to investing, their odds are in your favor, and they are in your favor by a big amount. That's why investing. Just think, all the people who put $100 a week into the lotto, and people do this, $100 a week into the lotto, if they put that money aside and invest it, in fact, I'm going to do it right now. I'm going to do, say they started doing that at 21 years old, compounding calculator, compound interest calculator from Money Smart. So we're assuming this is a good one. So say they start with $100 and you put $100 every week. Instead of putting it into the lotto, you put it into an investing. So initially you're a pretty bad investor, but you decide to learn to get better returns. So we're going to compound it monthly, and we're going to compound it for 50 years. So you start at 21 and you finish at 70. We'll put it at 65. So we'll put it 45 years. And what interest rate? We'll save 12%. Not quite 20%, which is what I'm getting, and not quite 8%. We'll say 12% because you become a better investor over time. We'll just say that. And so after 45 years, you have $9 million. You have guaranteed yourself a win in the lotto. You've won $9 million. So instead of putting $100 a week into the lotto with no guarantee you'll win, in fact, you have a very low probability you're going to win in the next 45 years, you've guaranteed yourself a lotto win. You've won $9 million. Regular deposits, only $234,000. Total interest, $9.1 million. Okay, so this is the power of compounding, and this is the reason why financial education should be way more widespread. Why would you put your money into Lotto without any sort of guarantee you're going to win anything? And then if you did that for 45 years, you probably don't have much when you retire, but you guaranteed $9 million if you do this over a 45-year period with a nice, let's have a look if you do 20%. Not 200, let's do 20%. You have almost $200 million. What about 8%? I'm just going to do 8% because that's like normal returns on the market. So 8%, even 8%, $2.3 million after 45 years. Let's say you just do it for 50 years. What does that increase to? $3.4 million. Oh, jeez. This is exactly why we need financial education at schools, because if people knew this sort of thing, why would you put your money into Lotto? You're almost guaranteed not to win. You've won. You've won. Anyway, thank you, Sensei. AHC 2024, issue with integrated research is new CEO as he hasn't delivered a good result for the previous company he used to manage. Actually, I remember this now, yes. I was actually really disappointed with the new hire of this CEO integrated research. I was like, what? What a stupid hire. Well, not stupid, but an uninspiring, what's the word? Uninspiring CEO. Uninspiring hire. That's what I was trying to find. A really uninspiring hire. Maybe no one wanted it. I don't know. But I'm going to give him time. I'm going to give this new, I'm pretty sure it's a him, I'm going to give this CEO a bit of time because maybe they learned a few things in their old roles and maybe they're a much better CEO. We just don't know. But odds are against him because his history, not that good, to be honest with you. Quite uninspiring, quite not the best hire in my opinion. Jason at Nemo, I just checked JB Hi-Fi and it got close to my 85 target I called. However, you need to pay the trader and take the profits. It's an interesting stock chart and would love another update on your thoughts. I'm going to give another update. So I have sold out of JB Hi-Fi. The main reason is just valuation. This could be a big mistake. It is at the high point of valuation. Share price going sideways now. Nice little consolidation period. Share price about $82. So I sold at 80. I'm no longer a holder. And to be honest with you, one of the reasons I sold, I do think it's overvalued. And when I bought way back in the start of 2023, I think the P/E ratio was like 10, or maybe it was 8. That's good value for JB Hi-Fi. Now it's 20, I think. I think it's 20, maybe 20, yeah, 20.1, which is a little bit high for this company. So just based off probability, this is just based off probability, there's a greater chance the share price might drop then rise significantly from here, unless the company grows their profits at a really strong rate, which I'm not sure they will. So there's a few things going against JB Hi-Fi at these levels. But it wouldn't be surprised if the share price keeps on climbing if the company keeps on hitting it out of the ballpark when it comes to their financials. Okay, so Sham G33 X EZZ X dividend, the 5th of November. So I'm pretty sure the big drop in share price for EZZ was before the X dividend. Share price down again. It's just amazing. It's just a little bit of negative sentiment can just drive the share price down and down and down. That's what's happening with EZZ. Just a bit of negative sentiment, and just people are just selling en masse. They don't care. But eventually there will be a floor, and people go, oh, there's some value in this company right now. So it did go ex-dividend, yesterday. But it was only 2 cents. So you can't really say that drove the share price down. But I just think it's just a bit of negative sentiment, short-term negative sentiment. So let's have a look at the chart for EZZ. Yeah, this is just short-term negative sentiment. We saw the share price drop a fair bit back in July, not as much as this. Well, maybe by percentage change it was. Share price went from 240 down to $1. Yeah, by percentage change is very similar than what we saw in July. Then a really good run up and the share price has pulled back. So what's happening now is those shareholders are getting really nervous. Maybe their stop losses have been reached, are selling out, and they're just dumping on market. So when they dump on market, the share price will drop. They just can't handle it anymore. Got to dump on market. So eventually the share price will find a floor. And the last time there was a really big down day, down 15.4% on the 29th of July. And then the share price went sideways. There was a couple of down days in there. Like there was a day when the share price dropped 10% on the 2nd of August. But it did find a floor. And when the share price dropped below about $1.70, we did see some buying. I've yet to see that with EZZ, and it has dropped below one of my support levels. So I think this company is starting to look interesting based on valuation again. But I don't think the ex-dividend had much to play. It was only fairly small. Sensei says, I bought a big parcel of AL3, is that AML3D, when it was 55 cents in September 2020, all-time peak, and still holding, and didn't sell yet. AML3D. Let's have a look at the chart for this company. I do like this chart. So I do like it. The really big run-up based off the next investors hype, and then the share price pulled back, and then it found a bit of a floor and has just gradually started to increase. Exactly what I like to see. You can see it's going up and down in little waves, but each high is higher than the previous high, and each low is higher than the previous low. So this is a nice looking chart for AML3D. If I held shares in this company, I would not sell just yet. Okay, yeah, I'm going to do a video about books. I'm going to end it there for today because the video is getting to 45 minutes and I need a drink. Not that sort of drink, just a drink of water. Anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.